Hi everyone, today we did get that continued sell-off that we expected to. We said it in yesterday's video. We expected this to kind of continue to drift down here, and we did. It was a little choppy early in the session, and then once we got Fed Powell talking, he said some pretty bearish things about the economy. You can see that big down candle, 1.29% right to the 144 EMA. Did catch a little bit of a bounce from there. Is this a consolidation low? Are we going to hold this zone in here? Let's take a look at the charts and see if we can find some evidence for that or against it. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So like I said, in news today, we got Fed Powell talking, and he said some pretty bearish things. He said the tariffs do pose a threat to controlling inflation and boosting growth. He said inflation has been tapering, but he does expect at least that one-time price increase from tariffs. He also said the economy is going to be affected, and he does believe that growth is going to slow. We've seen growth slowing, and we've also seen the job market tightening. All of those things have potentially increased the chance of a hard landing. He said the Fed will continue to ensure prices are stable, and they want to make sure that prices don't continue to go up after we get that tariff bump, which they are expecting to happen. And because of that, they are not going to do anything in the near term. So they're currently on hold, which markets kind of thought we were going to get a little bit more cuts potentially sooner because of this risk. But now he put some cold water on that. So now we're looking at cuts later in the year, if at all. You can see the market was expecting 3 cuts. Now we are not looking at that. Probably 1, maybe 2, much later in the year, waiting to see how this all flushes out. So more uncertainty on the rate cut side, as well as the risks of inflation and slow or little growth from the economy is what they're expecting, at least for now. So pretty bearish from Fed Powell, honestly way more bearish, way more information than I would have expected from him. And markets obviously sold off pretty dramatically on this talk that he gave today. Moving over to fear and greed, we're down to a 14 from an 18 or 19, whatever we were at yesterday. And this has been a long time. We've been in extreme fear since back here in mid-February, and we are still here in mid-April. So more than 2 months at this level. I don't know if I've ever seen it stay that low for that long. Maybe we'd have to go back to COVID or something like that, a more dramatic economic time. This is really centered around tariffs, and this has been a long time at extreme fear. And you can see all of the major metrics, no movement there. Put call ratio turning back up here today. Volatility turning back up as we kind of expected that it would. Safe haven demand turning back down. Seems like bonds outperformed a little bit, and even junk bonds getting into extreme fear here today. So every major metric except for the VIX are sitting in extreme fear still here today. Moving over to the economic calendar, you can see core and headline retail sales came in really good, better than expectations on the month over month. Core retail sales month over month also better than expectations. So everything good there. Seems like we're seeing economic strength. Atlanta Fed GDP came in quite negative, but slightly less negative than the previous. And look at that bond auction. Yields went up almost 20 basis points there. So really big move there on bonds. Not what you want to see. I want to see how that affected TLT later. And then for tomorrow, ECB interest rate decision, Philly Fed manufacturing, 5-year tips. Want to see that continue to stay low. Atlanta Fed GDP for Q1. And then really nothing here for the Friday. Remember, we are closed for Friday. And then tomorrow is options expiration. 3rd week options expiration is tomorrow as well. Quick look at earnings. Most of the earnings has been pretty good or uneventful. Haven't heard anything major out of the ordinary. Overall, pretty good. And then for tomorrow, we start off with those tech earnings. Netflix tomorrow after hours. United Health tomorrow as well. Nothing for the Friday, obviously, but those are the big ones. And then after tomorrow, into next week is when we start to get the heavy hitters. And then quickly moving over to the charts here, you can see down 2.2% on the day, right to that 9 EMA. Zone of support there, maybe. Momentum stepping back to bearish, RSI stepping back to bearish. The candle looks pretty small, but a 2% move is pretty dramatic. Obviously, we got the gap down, gap fill, and fall. And then in the after hours, basically unchanged. We're going to see if this zone here breaks or not, just like we talked about on the intro. Overall structure still very much bearish, as you would expect. Nothing changing, especially with the down here today. And then looking at that hourly chart and the levels here, you can see consolidation at the level 531.47. Touched it a couple times and then clearly broke it on the 11 o'clock candle, and then 12 o'clock big down move, consolidated right at the next level. So your support is right now 524.84. We did get back above it on the last candle of the day. Don't forget options expiration is much higher from here for that Max Payne style finish. that could happen in the last 5 minutes of trading. So I wouldn't play it immediately tomorrow, but understand we could see a push up for a better finish, more in line with max pain. Otherwise, structurally, we're back below the 200. The 144 held, but we're below all the short-term EMAs. Very much a downtrend. If we get back below 524.84 and that 144 EMA, I think 517.12 is in play back at this previous low here. And then you can see I do have an intermediate level, 513. You can see that kind of wick consolidation here. We came down, touched it, and then bounced to there. But 517.12 is a major level for me, and I do think that's where we will go if we get a 524.84 break. Moving over to the Tasty charts here on the 4 hour, we didn't quite get to the level I thought we might. I thought the trailing stop was in play, and I still think that that is possible. You can see we're back below all the EMAs here on the 4 hour chart, but that trailing stop still bullish at 514.26. That's potentially in play. That's slightly below the 517 level that we just talked about. So maybe, maybe not, but I think this zone is definitely in play. Based on this chart here, that would take you below the high from this April 8th and 9th time period, also take you to these wick lows that we just talked about. Structurally, this looks like it's just really wants to go lower. It didn't do it. You do have max pain tomorrow, so maybe we consolidate one more day and then sell off into the Monday next week, but again, structurally, just looks weak, even with that bullish condition with the trailing stop as support there. Like I said, sitting at 514.26. Then moving over to the NASDAQ, a little bit more painful here, down 3%. We went right to this trend line, which was interesting. We'll look at it on the hourly chart, touched it, and then caught about a 1% bounce from there. We were down over 4% at the lows, but you can see momentum selling, RSI probably moving back down to that SMA, and then you can see we're below this low here, not great. The next low is down here around that 432 area. And then if those start to go, then we could be looking at a round trip of this move back down to these lows here. Is it going to happen quickly? Probably not. Is it going to happen tomorrow? I still think probably not, but you have to start to think that that is a potential over the next couple days to potentially weeks. And then looking at those levels here on the hourly chart, you can see really the same structure, just more aggressive to the downside. Consolidation, drifting lower. You had one huge wick here on the 10 o'clock candle. Threw a wick to the upside, kind of stopped out a couple people, I would guess. And then we ended up getting that big waterfall sell-off. And then you can see touch that trend right to the penny and then caught that nice little 1% move to the upside, drifting higher. Still very much bearish. In terms of levels, you have the trend in here again around that 437.70 area, and then my level 432.84. Like I said, that's that low back here that we were just talking about, kind of in that same range as the SPY charts. And then the next one for me, the next major level is this 411 area, right back to these lows, which at this point, based on the 446.65 level break, usually those major levels for me, once they break, I expect this to kind of continue to waterfall off with some potential profit taking in those kind of sub levels, more intermediate levels. Then moving over to the Tasty charts here, you can see that trailing stop 433.31. Again, I think that is in play for a test. We didn't quite get there. That was the level I was looking for as a potential zone of support. We are back below all the EMAs on the Tasty charts. Your current resistance is going to be up around that 450 area. The 8 EMA is there as well at 449.76. So that would be your zone of resistance. Come into that zone, reject, push back to the 433 area. Momentum bearish, selling volume on today's session as well. I just don't see this turning around until you get a true test of this zone here and that key trailing stop at 433.31. Moving over to the Russell and the Dow. The Russell actually held up really well, down only 1% on the news. So the Russell has sold off a lot. It's sold off more than its peers, and maybe that's why it's starting to hold up a little bit better in the short term. Interesting to see that. It did test the level 183.29. That was the zone we talked about as a zone of support if 185.63 broke, which it absolutely did. We gapped to the level, sold off right through it. And then you can see that support 183.28, and then you got trend support in here as well as at 181.84. If this zone goes, then you're looking back to the lows 172. But for now, this zone has held up really, really well. I'll be watching that one tomorrow. Want to see how this goes right in that zone here. And then looking at the Dow was down even more, 1.72%, more in line with the SPY and the NASDAQ. Broke back below 398.76. We said that's where we were going based on the finish below the level there at 404. Sure enough, we came back, retested that level, and then continued lower after filling the gap. and now your support is 392.44. We'll see if we get there. Momentum and RSI says this should go a little bit lower. We could still get a higher low setup. That's not impossible, but either way, I still think we're going lower in the short term. Moving over to the Mag 7. Mag 7 was worse than everything, down 3.85%, right to the level 249.41. That's what we were looking for in the sell here today. We finished right on top of it, technically below it by about 25 cents or so, but right on top of it, realistically, momentum bearish, RSI bearish. Looks like we're going to break that RSI as well. We're right at it. If it goes through it tomorrow, then you have to be looking back to that 230.50 area. That's where we came to, perfectly marking that bottom, marking this bottom back here at the 5 August, making this a level, and then we came back right to it again. Found a nice support, but so far this looks like markets are going to continue to sell through this zone, and the Mag 7 continues to lead us lower. Moving over to Apple and Microsoft, these continue to sell 3.89 and 3.66% respectively. Big candle here on Microsoft, breaking back below that key level at 372.08, closed below it by a little bit there, about 40 cents, and then Apple right at the level 193.96. If it breaks through there, then you're looking for 186.81. Got some trends in there. Either way, everything is continuing to step to bearish. Microsoft looks a little bit more bearish with that bigger swing down on momentum, and we'll see if this continues to go here, but it looks like it will. Moving over to Tesla and NVIDIA. Tesla sold as well, almost 5%. It's still in the same trading range. The zone of support is still that 232.57 area. The next one would be the same low as back here mid-April and the same low from mid-March around that 214 area. Either way though, this seems to be giving lower highs with kind of flat bottoms. Looks like we're drifting lower, momentum bearish there as well. And then NVIDIA nearly 7% down on that news. To the lows, it was much, much worse. You can see to the lows, we were down about 10.5%, somewhere in there. We did find a little bit of support at the trend, closed right on top of it, almost to the penny. Momentum bearish, volume bearish. Seems like this is going to go right back to that 95.74 area. I would stay out of the way for now. Maybe you want to trade off this trend line if you do want a pretty tight stop, pretty good risk reward there, but I would be patient. If you're going to do it, stay really, really tight to the level. If you can hold the trend, maybe there's an opportunity, but again, everything looks bearish and I would expect this to go lower. Moving over to staples versus discretionaries, we got everything selling down 1% and 2.5% respectively. Momentum swinging to bearish. Looks like everything is set to go lower here in tomorrow's session. Again, we could see weird price action because it's options expiration, but it just seems like everything is consistently looking for lower lows. And you can see momentum, RSI, everything just says this should continue to drift lower off of this trend retracement, trend resistance, continuation lower, potentially taking out these previous lows. Moving over to breadth. Breadth did continue lower. It wasn't as bad as I kind of thought that it might be, but it did continue to sell off here. 16 is the next level for 20-day. 50-day broke below 22, so looking for 15.15. And then you can see 10.50 is this next zone in here. Momentum not going with it quite yet, but price action says this should go lower from this zone of resistance here. So again, everything points to bearish over the next couple days. Moving over to the dollar. The dollar did end up continuing lower in the session, closed back below that 99.83 level after getting back above it here for the Tuesday session. So far showing just a little bit of strength for that Thursday open, but again, continues to look bearish. This has been very much a downtrend. Structurally, very much a round trip of this move, broken below those lows, looking at the 96.86 level, which really takes us all the way back here to April of 22 since we've been at these prices. So we're well below all of this consolidation. You have to start to zoom out to look for some zones of support. Like I said, 96.85 could be the next zone in here. Got some trend support in there. Still very much oversold on the daily chart, which is interesting. But again, this is a structural shift and the dollar continues to sit lower, which should help for global trade. We'll see if that matters over the next year or not. Moving over to bonds. Bonds actually held up really, really well, even with that bond auction going a little bit higher than the previous number. So like to see that. TLT had a good day, up about 0.5%. Bonds continue to be a good place. Lots of volatility here. We were quite a bit higher back here early April, but either way, we bounced off this low, continues to find support in here. I think this is still an opportunity in this zone. TLT pretty much unchanged on the day, so bonds continue to be stable. Look for those yields and then pour those yields into other assets. Continues to be a good opportunity, especially with equities looking as terrible as they do. Moving over to the VIX. The VIX was up about 8%, continues to bounce off of this zone just like we thought that it would. So continuing to believe this is going to go a little bit higher, potentially in the 44 area. Maybe we get a lower high in here, but either way, it looks like the VIX is set to go higher in tomorrow's session. 33.86 is resistance, 37 is the next one, 44 I think is probably where we'll get to before this move is over. Moving over to my accounts, I made a little bit more money on the day, about $100. You like to see it. Obviously, the NASDAQ was down a whole lot, and I was short most of the day. I did try to take trades in both directions, and I traded a little bit more than I wanted to. I was in and out a few times. You can see 16 trades, so that's 8 round trip trades. Not a whole lot, but a little. And I was short into the close. I didn't hold as much as I wanted to through that down move. Either way, like to stay positive on days like today, continuing to work my way back towards positive for the year. So it's been a really tumultuous year, and I'm really pretty much unchanged on the year, so can't complain too much, slowly whittling away at these losses. In terms of thesis, obviously I am bearish into tomorrow's session. Again, I don't like holding things overnight and being short overnight. There's been a ton of overnight volatility, but there's been lots of intraday moves, so that's worked out fine. Again, overall bearish, but still being fast and nimble on the trades. Let me know down in the comment section what you thought of the Fed Powell comments today. Did you feel they were as bearish as I did? Or was he more neutral or just in line with previous comments? Let me know. Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.